Hey everyone, welcome back to the Daily Gold Podcast. Today we're chatting with a new guest. He's Stephen Feldman. He's the co-founder of Gold Bullion International, and he was formerly a partner with Goldman Sachs. Stephen, how are you today?
I am well, Jordan.
Let me get right to the first question, which is, can you give us a brief intro to your background and then why you decided to co-found a bullion company?
Sure. As you mentioned, I was a partner at Goldman Sachs. I was always in the investment businesses focusing on hard assets. Started as a real estate investor, started and grew an agricultural business, a farmland business, and my last job was founding and building an infrastructure investing business, which when I retired was among the largest in the world. So carrying on the theme of hard assets, physical assets, there was an opportunity that was presented that came out of the 2008 crisis. My partner in the business is a gentleman named Dan Tapiero. He's been a macro hedge fund trader for 20 years. And he called me in the midst of the meltdown, and he said, I went to my brokerage and I asked them if I could buy some gold, some physical gold. And I couldn't do it. I didn't have enough money to do it, even though it wasn't an insubstantial amount of money. And he was very surprised to learn that the banks wouldn't accommodate a ready, willing, and able customer. That gave us it was a bit of an aha moment where was there an opportunity to try to be in that position to provide a solution to investors who were seeking to own physical precious metals, and probably for the most part gold. And the opportunity really was bolstered at the time by some macro winds at our back. That investors had all the fun that they had in the stock market. There was a bit of a view that they would start to move from financial assets to physical assets to the extent they can get them, and it's not easy to do. And that the price, which was sub $1,000 an ounce for gold at the time, would likely increase as governments and central banks would to deploy monetary policies to deal with the crisis and the ensuing debt that would come along with solving some of the immediate crisis concerns. Fortunately, those dynamics have played out, and we started a business to solve that problem and get behind those macro wins.
Yeah, let's just talk a little bit more about those macro wins, and then we can get more into Gold Bullion International later. I have to think that starting the business, you and your partners, you probably saw, more than just an opportunity for a couple years. It was obvious, given the financial crisis, there were going to be some major immediate catalysts for precious metals. But I'm thinking you probably saw an opportunity there for something that could, last perhaps 5 or 10 years or more than that. Can you discuss that?
Sure. Good question. And what was interesting as we did our diligence was that here was an asset class that had been around for the better part of 5,000 years with an astonishing lack of institutional quality around it. And not to say there was none, but it was growing up, myself and my partner, in what I would call the institutional financial services businesses as investors, but I was at Goldman Sachs, which also provided quite a bit of financial services, not just as a principal. We didn't see a lot of this institutional quality in the average physical gold purveyor. There was very limited technology. Some orders, at some places that we looked into, they were still taking the orders by fax. So the other part of the opportunity, which is really the opportunity in any business, which was to create a better mousetrap. And for us, that word always came back to me, which is how do you create an institutional quality company which will appeal to a wealth management industry that has not had a lot of exposure to that institutional quality physical gold vendor. And that had a bunch of different manifestations, and it really dovetails why we think we're different than the other bullion companies out there. So we started with technology. We've spent millions and millions of dollars to create a technology platform that integrates into wealth managers. We have world-class operations and partners. We partner with the best and oldest and most reliable vendors, whether it be Brinks or Viamat or Wells Fargo or Lloyd's of London. We take our risk and compliance very seriously. We run it in a sort of in a Dodd-Frank world with high transparency. We have institutional quality board, Arthur Levitt, Sally Krawcheck, Wes Clark. We have a management team that's not gold bugs. It all came out of the wealth and asset management business. So, ties together, you got to take, there are a lot of great ideas in the world, and there's macro wins behind lots of ideas, but executing a business plan that takes advantage of that and builds an enduring business. We don't view this business as a 2-year business. We know even whether gold prices go up or go down or people's allocations go up or go down in their portfolio, there's always an opportunity to disintermediate folks who are not running great businesses in the asset class.
Right, and maybe we could talk about the allocation to that. I understand that it's a great opportunity for you. Whether the bull market continues or whether it ends in 5 years or whatnot. But just from my perspective, it seems to me that the general allocation to gold is still pretty small, even though we've been in a 12 or 13-year bull market. I mean, do you have any insight on that? What are you seeing from your area of the business?
Well, it depends where you are in the world, and obviously there are places in emerging Asia, China, India, which have represented in the last decade half of the gold demand. And that's, for the American investor, that's a bit surprising, where everybody thinks that gold is tied somehow to what Ben Bernanke does, but I don't suspect that the average gold investor or buyer in India is thinking too much about that. And so there's always this underpinning of demand that occurs that occurs in that part of the world. But you take at the other end of the extreme is the American investor, and there's a long story which I won't go into how it became this way, but Americans are in love with financial assets, and there's good reason for them to be in love with financial assets, because it had from Paul Volcker till 2000, it had a heck of a run, and the bond market run continues to today. So when you're sitting here and you're having really great returns in the bond market, and you're having good returns in the stock market up till a decade ago, but I guess wishful thinking about them coming back, because that's what you're used to, there wasn't really a lot of focus on gold. Moreover, there are some negative points of view out there. It's always been an asset that's been associated with the end of the world. There are investors like Warren Buffett who call it unproductive. But fortunately for us, I think the tide has pretty much turned. I think a lot of it has to do with relative performance in other asset classes. But it also has to do with a lot of institutional third parties, people who are not sellers of gold, beginning to espouse, to talk about the case for gold and the case for it in a portfolio in a meaningful way. So whether it's Ray Dalio at 10%, or it's Lisa Shallett, who runs research for Merrill Lynch, 3 to 7%, there's a lot of people promoting the idea that gold is an important part of your portfolio. Now, 3 to 7 or 10% is still 100 miles away from what U.S. investors have right now. I'd say the average retail investor has less than 0.5% in their portfolio, and the average institutional investor has nothing. So you see a tremendous opportunity. We hope that people will take advantage of this opportunity before the price continues to leg up, which I think is likely to happen.
Stephen, I kind of want to get your view. I mean, you touched on it a little bit, but it's so interesting because some people are hardcore gold bugs and they only want to own gold and silver. Yet some people, they understand, commodity bull market, but they won't go anywhere near gold and silver. They just want to have productive assets, as you said. Now that you
Yeah.
have experience in kind of both sides of hard assets field, what is your opinion on all of that?
Another good question, and interestingly, a conversation I was just having this morning with a very well-known wealth management company. I happen to agree with their CIO's view that gold, interestingly, they don't treat gold as part of their commodity basket. Definitionally, their commodity basket are things that are used. Certainly platinum, palladium in the precious metals category, silver to some extent, obviously all the others, oils and grains, are in their commodity basket, but gold is not. They don't even consider gold a precious metal. They consider gold basically money. The only kind that you can't print. It's been around for thousands of years, and that we live in unprecedented times. So it'll perform as somewhat of an insurance policy for things that we can't figure out how they're going to end. And I think after being in this business for the amount of time that I have been in, I've come to that conclusion where people have lumped together precious metals, but gold actually has a special place. It has a special place in investors' minds. When I go to a cocktail party, I don't talk about gold and palladium. I talk about gold. That's what people really want to hear about. And it has a special place because however hard it is to be an investor, and I've been a professional investor for a very long time, these are the times that are people are least able to predict and have conviction, because we have an unprecedented amount of debt, we have an unprecedented amount of central bank intervention, we have an unprecedented amount of politics in our business, in our markets. And we have actually some manipulation, the most important manipulation being of treasury rates, which prices every other asset. So all the real estate values that are up, every income producing market is predicated on low discount rates due to a very low risk-free rate. I would be the first to tell you, I don't know how this is all going to turn out. I read more about investing than 99.99% of the planet. I find it very, very hard to think that I can figure this out when some of the major hedge fund guys are giving their money back because they're saying it's too hard of an investment environment for them. So we look at the asset. I think a lot of people have just come to the conclusion that in a world that it's hard to predict, where black swans, the known risks as well as the unknown risks are about as high as anybody's seen in their investing lifetime, there should be some allocation, at least on a risk-weighted basis, to physical assets, to gold, to a monetary asset. So we're seeing, in a general case, people being more allocated to scarce assets and more allocated to gold as probably the key scarce asset, because that's the one that's liquid, that's the one that acts like money, and that's the one that's not being printed.
And you touched on some of the macro tailwinds earlier, and I'm just wondering, in your opinion, what do you see as the potential biggest catalyst for the gold market? I mean, is it specifically the average investor portfolio manager deciding to allocate more of their funds to gold because, as you said, that's so minimal, or is it something else macro related?
There's some interesting statistics which we don't know which will trigger what I would call a more vertical leg up. We do believe there's quite a bit of reason to believe that between the monetary concerns in the Western world and the increased disposable income and GDP of the Asian world, that gold prices are much more likely to move up than they are to move down. What shoots it up in the world? Well, that's a bit more of a complex question. Certainly on the monetary side, I don't think there's anything on the Asian demand side that's going to explode for any reason. I think it ends up being more on the monetary side. it could be political in the United States, it could be fiscal cliff, it could be a downgrade, it could be a debt ceiling, it could be an interest rate, the inability of the Treasury to roll over a bond auction. It could be something along those lines, I think, is the more likely experience where we'll see a day where the gold price goes up by $100 or more. I also would think that when some of the solutions die down in the short run, there's a lot of betting on gold prices in the States based on functional or dysfunctional government in the short run. So fiscal cliff gets solved, probably not bullish for gold, but anybody who does the math will see that there's still no solution to the debt crisis that's fiscal. It's all monetary. There's not enough, you can't tax people enough, and you can't cut programs enough in a politically expedient way to solve $16 trillion of debt and growing and entitlements and growing. So any hitch in that, and then there's always the unknowns. I don't really know what happens if there's a day of reckoning for $1 trillion of student loans and all of the mortgages still held with government guarantees, or if there's a pension liability gap in the state of California that can't possibly be plugged. It makes me nervous. I try, in the interest of sleeping at night, I don't write these all down in one place. But if you're looking for the next big leg up, it's going to be the next confidence. It's going to be associated in all likelihood with some crisis of confidence or performance in a federal government agency, Fed, or state. Probably less likely that it's something that's probably known but not being focused on, as opposed to something unknown.
Okay, Stephen, now getting back to Gold Bullion International, what do you think makes you different from the other bullion companies out there? What separates you from your competitors?
Well, certainly it goes back to a previous answer that I had on this, the notion of our ability to service the wealth management business in a way that up to date has not been serviced. I was flattered. I was at a cocktail party with a bunch of gold executives last week, and one of the executives said that we had the killer app for the wealth management business. So if you wanted to go buy gold and you wanted to go online and you wanted to keep it in a shoebox underneath your bed, we have competition. We're not a dealer. We're an agent. We are not a market maker. We have 14 dealers that bid on every order that's placed. But where we do differentiate ourselves is when we're required to service a giant institutional client who in turn has thousands and thousands of important customers. So at Merrill Lynch, where we run their precious metals platform, they can in turn service the entire thundering herd through us without having to worry about any technology, compliance, logistics, transparency, etc. There's no such thing as a risk-free model, but it's a very low-cost, low-risk model, which again, very rare in the gold bullion business. We are a bit of a utility. You don't see our name in a lot of places. You'll see it in the Merrill Lynch disclosure. We also back capital markets, issuers, people who issue gold-related products. We provide the gold bullion for. We also have a program for the RIA community where you can open your own account and you can also integrate it back into your reporting system. We have a direct business that backs the Hard Asset Alliance, among other online portals where their customers are aggregated, but when they execute through us. We don't see any companies with this level of agility, but we do see companies in different places who do different things. Many of them have become our partners because very few of them are going to build the processes and the technology that we have already built. So it's best to partner with us as opposed to compete with us.
And Stephen, before we close, can you maybe offer any final thoughts on anything we haven't touched on here, and let our listeners know where they can go to find out more information about Gold Bullion International?
Well, we thank you. That's probably the best question I've heard. Obviously, we're in a business. We're in a business where we like customers, so we encourage you to go to the website, which is www.bullioninternational.com. So Bullion International, one word. We also have all the contact information there, and people can open direct accounts, but they can also be referred to some of our partners and affiliates to open accounts. Here's the part. I open most of my business development presentations with the same thing. I'll close here. I alluded to this a little bit before. Investing for the moment is a very dangerous endeavor, and it was a funny joke when people saw when people said, "Oh, I had a 401k, now I have a 201k." That was pretty funny, unless you were the guy with the 201k who was 60 years old and thinking about retiring, and all of a sudden, your life didn't end, but and the world didn't end, but your investing life got hurt, and the way you're going to lead your life going forward is going to be very, very, very different. And because investing is hard, Americans who have been defaulting to a couple of different options. Diversification is one of the most important things that an investor can do. There's a saying that it's the only free lunch on Wall Street. But so few people seem to somehow have this negative connotation that investing in gold is not the right way to create that diversification. Those folks are wrong. I eat my own cooking. I am a very, very happy gold owner. I am more affluent for the holding of gold, and risk adjusted, I'm safer for holding gold. And I think people can come to our website. They could see a lot of very institutional quality information about the case for gold, for portfolio diversification. We are trying very hard not to be biased. One of the very good things that I like about this business, and I'm grateful for the opportunity, is not only to build a nice business and give people a good opportunity, but I also feel like we're doing something that's a bit noble by helping them diversify their portfolio, get exposure to gold, an important asset class, in a very cost-effective and transparent way and very liquid way. There's a lot better than putting it in the shoebox under your bed, a lot cheaper, a lot safer, and I think we can prove the case intellectually and institutionally. So anyway, thank you very, very much. I hope that wasn't too verbose, but it was important, and I thank you for the opportunity.
No, not at all. Thanks so much for the interview, Stephen. I really enjoyed it, and look forward to having you back to speak about gold again in the future.
I would look forward to that. Thank you very, very much.